So this will be a quick video about a lot of people feel, myself included, whenever we go into a high-risk plays, why patience is actually a big part of the story if you're going to let the market shake you out. Just going to talk real quick about market volatility, long-term gains, informed decision-making, emotional control, risk management, and market timing. Quick background on this. This little token right here is called 1776. If you actually look at the chart, you would see that this thing actually ripped from the moment it launched. It just ripped all the way up to a little over 1.6 cents. And as you will see, there were quite a couple sell-offs, and I'm going to explain you why. Or at least I'm going to attempt to explain why. So to tell you why I invested in this token, so I'll have to look back into another token that I went into before. The token was Zelda. You may or may not know this token, right? So Zelda actually took about a year and a half to 2 years to launch. At least that's what we were told. And there was a lot of hype around the project because the first version, V1, the first iteration of this token, Zelda Inu at the time, actually did over 100x during launch. And was it 100x or 300x? I can't remember. So there was a lot of hype around this one too. And it started out great, right? But even though it doesn't look like a classic pump and dump, it was more of a slow bleed afterwards. The dev actually seemed to have abandoned the project at the time, so there was just a slow, gradual death, a gradual decline. I'm still of the idea, and is my theory, that the dev actually stole from everybody and he was slowly bleeding the chart and the liquidity from different wallets, very strange wallets that apparently just they would sell, but they never bought into the project. So more than likely he had a private pre-sale, but didn't tell anybody. In any case, so when this project failed, a lot of people were heartbroken, myself included, because I actually told some people to actually invest in this, and it worked out great for a long time. And I even told people to actually sell somewhere around the 23 cent and 26 cent mark. Some people listened, some people didn't listen. I actually sold up here, but ended up rebuying big dip right here just because I thought, hey, this is just regular correction is going to keep going up, and it just never did. Bought a few more times on the downtrend, and I had told myself, I actually made a box of how low I was willing to go because this was around my entry price at first. So once I broke this, it was pretty obvious to me that it was over. So in any case, to make a long story short, so the project failed. It's still going on, but most people don't want to see the reality. So I got contacted by someone on Telegram. Basically, I was pretty vocal on the Zelda Telegram. So I got contacted by a random guy on Telegram, and he spoke to me about another project called 1776. So basically, a lot of the developers and part of the team of Zelda, they were basically not happy with the way things were handled, the way the developer the main guy, Vince, basically just abandoned everybody and then just let the chart to bleed out. So they had this idea and came in under secrecy and launched 1776. So at first, everything looked great. The chart just kept pumping and pumping and pumping and pumping. Everybody knew that at some point a correction was inevitable, but the chart just seemed primed to actually pump forever. But we know how that goes. So honestly, it had a great run. Pretty good run, as you guys can see here. But the main thing about this token was it was built on transparency. And to be honest, I didn't know a whole lot about it other than, like the tokenomics, the fact that the contract was renounced. So there was less likely to be any shady stuff going on. However, come to find out, we had our first initial dip, and everybody thought it was normal. The dip got bought up fairly quickly, and it got back almost to previous all-time high. However, as you see all these candles right here, so the first thing that happened, apparently, there was a lot of people just swing trading this right here. And then I believe it was, well, this was some more sell-offs by some of the same wallets. And then right here, one of the people on the team basically said that they had their wallet hacked and that it was drained. It seemed to be true, but then there's just no way to actually verify this. So in any case, the dip was bought back, and then right around here, same thing happened, and they basically said that there was a lot of it was crazy. I was actually in Nashville enjoying with a group of crypto friends that I met over the years, and we were actually in Nashville. We were overlooking. I'm gonna try to. Where's the? Let me go to my saved messages. So I was actually right here overlooking Nashville on top of a bar when I was actually watching the chart just crash in real time. So there was a lot of alcohol involved. There was another buddy of mine, and he was actually very, he came from Zelda as well, and we took a loss there, so it was pretty emotional for both him and myself. Trying to make up some of the losses that we got, and just to see this, I got the message here. So my initial bag was actually worth $357 after the last dump, and up until recently, it's actually worth anywhere a little bit over 2K. So my buddy David, he actually, as soon as he saw the crash, I guess, there was a lot of drinking involved, and he actually went ahead and sold. So then again, when you sell, you realize the profit. So I'm not here to tell you, honestly, that crypto is not volatile. The nature of crypto markets, they're known for being extremely volatile when it comes to price. Price can, skyrocket 1 second or plummet the next one, and it causes significant emotional stress for traders. Now, this is when being in control of your emotion comes in, because you have to avoid panic selling. It's not always the best idea to do so, because you lock in a loss. You need to be patient. Patience actually helps traders avoid panic selling during market dips, and this will lead to losses. So instead, patience always pays off. Wait for the market to recover. The only exception is when a token or a project is an obvious rug, then yeah, obviously you can sell, and I guess it's acceptable. But in any case, the token recovered a little bit, and it actually came back up, and now the market just dipped again. So there seems to be signs of recovery. There's a few more holders. The team is extremely active, and they're actually looking for new partnerships all the time, and they're very responsive. So honestly, the main thing here is just, I guess the main point of this video is having emotional control, managing FOMO, fear of missing out. This will actually lead traders to buy the market highs. I know a guy, I'm not going to say his name, and I know a couple. They like to buy the tops of the market. It's almost impossible to time the market perfectly, but this is why you don't just buy all at once. That's why we DCA in, to get the best average price in the end. Working on patience. Patience will help you resist the urge to follow the crowd and wait for better entry points. Use an indicator if you have to. If not, then just use the RSI. The RSI is a great tool to tell you when a position is overbought or oversold. And I'll make a video of that in the future. And also, you need to learn to control your stress. Trading is stressful. I'm not going to lie. I'm a leverage trader, and I also do swing trading. And it's stressful, especially during volatile periods. Today, the market was dumping. That was pretty stressful. If you have heavy positions, you don't want to see some losses, even though losses are inevitable. You need to maintain your emotional stability. And what is that going to get you? It's going to lead you to more rational and less emotionally driven decisions. Also, if you are worried about a specific trade that you have or a specific project that you're in, you have to use risk management. If you're worried and you cannot sleep with a trade or a position, you are not doing risk management correctly. You should not ever invest more than what you're willing to afford, more than what you're willing to lose. You don't want to overtrade. Impatience can lead to overtrading. It's going to increase your transaction costs, even though most people don't think about it, and the likelihood of making poor trades. Patience always pays off. It encourages traders to wait for high probability setups. And then again, better entry points and better exit points. Waiting for the right market conditions can lead to do better entry and exit points, improving overall trade performance. So, in any case, nobody can time the tops perfectly, and nobody's going to time the bottoms perfectly. But the main point of this video is never make a rash decision, because almost all the time people regret rash decisions. Always better to keep a level head. Anyway, this video has gotten a little bit long, but I hope you get some value out of it, and I'll see you in the next one.